Hello everyone, Happy New Year. Hope you've had a good start to January and smashing your goals. I know I've made a very good start to achieving my goals and ambitions for the new year. Although dry January is not going too well. I lasted about 7 days and I've had a few beers, but what can I say? It's been a tough start to the year in lockdown. But focusing on today's video, I want to just track back to a video which I did a few months ago now about how I'm saving £20,000 to purchase a property as an investor. And I'm currently at around 18% of achieving that target. And at this rate of saving, it's going to take me a long time, and I'm aware of that. So there's no harm in me looking at different strategies for me to start investing in property right now. So that's going to be the focus of today's video, looking at exactly what rent to rent is as a strategy, the benefits of it, and also the drawbacks as well. So before we actually get into that, make sure you smash the like button. And if you haven't already subscribe to my channel to stay up to date on all the latest content which I release around property, finance, and investing. So what is rent to rent? The clue is actually in its name. It's where you rent a property from a landlord and typically convert that property into a multi-let or a house of multiple occupancy, which basically means that you rent out individual rooms as opposed to renting the whole property out to one family or one person. Or alternatively, you could convert that property into a serviced accommodation to maximize your monthly cash flow. Essentially, you are leveraging somebody else's asset, which you don't own, and making a profit from it. And this is a business model which a lot of big companies actually implement. If you take a look at Uber or Just Eat or Airbnb, for example, those companies all generate massive amounts of profit from utilizing and leveraging other people's assets. And that's essentially what the rent-to-rent strategy is. A quick example of a rent-to-rent strategy and some of the numbers involved. Let's say we have a landlord who owns a property, a 3-bed property, and is looking for a rental income per month of £1,000. So we will take management of that property, take all the headaches away from that landlord, and pay him his £1,000. We will then convert one of the rooms, the living rooms on the lower floor, and convert it into an additional bedroom to make that 3-bedroom house a 4-bedroom house. And then we'll rent out the individual rooms for £600 per month. Now, we will have to consider additional costs of managing that property in terms of paying the bills, council tax, electricity, etc. And that will be approximately around £500. So our total expenses will be £1,500, but the money that we are generating from renting out the individual rooms is £2,400, which will give us a net monthly income of £900 per month. Now, at this stage, you're probably thinking, why would a landlord do that? And why wouldn't he or she just rent out the individual rooms himself and make that money? And the answer is that there's some landlords out there who don't want the stress and aggro of actually being a landlord. And they just want to receive their passive income each month so that they have enough money to cover their mortgage and perhaps make a little bit of profit at the same time. Let's not forget as well that being a landlord comes with a significant amount of risk, and particularly as we've seen in recent months with the pandemic, a lot of landlords have seen their tenants move out, move back home. They can't afford to pay their rent because they may have lost their jobs or reduced their income because they've been on furlough. That is a risk for a landlord, and having that stability in the rent-to-rent strategy, knowing that you're going to have a monthly paycheck, month in, month out, is peace of mind for the landlord to kind of enter into these deals. So it's a win-win situation, as I mentioned, for both the landlord, who minimizes his risk, gets his guaranteed income, and both the property investor, who is starting to earn money from not owning an asset or a property. So let's take a look at some of the benefits of the rent-to-rent strategy from a property investor's point of view. And the first one which I want to discuss with you is there's no upfront deposit. And on top of that, there's no stamp duty because we're not owning the property, so there's no tax on it. So all this saving £20,000, which I mentioned before, I don't have to do that because I'm not getting a mortgage, I'm not owning the property, I'm not paying stamp duty on the property as a form of tax. I simply have to make my agreement with the landlord to start earning that income. So this is an ideal strategy for property investors who have limited funds to start investing in property. And as I mentioned at the start of the video, that is my biggest obstacle in actually starting to invest in property. Getting that upfront cost to be able to purchase a property, it's a big obstacle to overcome. And if we take that factor away, then the rent-to-rent strategy is an ideal way for me to start getting that experience of managing tenants, of managing a property without actually owning it. I can start making an income, a good amount of income from day one. And because there's no deposit, there's also no mortgage. So there's no more worries about financing, interest rates, credit history, all that drama that comes with buying a property, and all those potential headaches are irrelevant because, as I said, you're just making that agreement with you and the landlord, and there's no financing, no additional costs, no additional big costs that you need to consider. However, some of the drawbacks associated with the rent-to-rent strategy, the first one being capital appreciation. You don't get the benefits of capital growth if you are investing in the rent-to-rent strategy. So let's say I've agreed a 5-year lease with a landlord on a property which is worth 400k. And over that 5-year period, I generate a profit of £54,000, which is great, fantastic, it's money in my pocket. But let's say the actual property benefits from a 5% increase in value over that 5-year period. That means I've missed out on a potential capital growth of £100,000. So there's two ways in which you can look at this. You're generating money from an asset which you don't own, fantastic, a good amount of money over that time period, but you're also missing out on that capital growth, which is a massive amount of money, almost double the amount of money which you generated from actually renting it out. But I guess it all depends on your strategy as an investor. So if capital appreciation is a key factor in you investing in property, you might be using it as kind of a retirement fund, then rent to rent is probably not the strategy for you. But if you wanted to start with a minimum amount of money investing in property and generating and maximizing your monthly cash flow, then it could be a strategy for you. Another drawback which we need to consider as well is that you as the investor are now responsible for managing that property. So what comes with that responsibility is voids. If you have voids in your property, so some of your rooms are not tenanted for a certain amount of period, you still have to pay what you've agreed with the landlord every month, regardless of if all your rooms are filled or not filled. And on top of that, you also have to pay all the associated costs and bills which come with owning a property. Maintenance as well, so if anything goes wrong to a certain extent, you are responsible for and not the landlord. The landlord is typically responsible for things like the boiler breaking or the roof collapsing. As an investor, you will be responsible for any maintenance that involves the interior or any cosmetic actually within the property. Also, a lot of property investors get into property to achieve financial freedom and generate a passive income. Now, rent to rent is not a passive income. There's a lot of admin involved. You have to deal with tenants. You need to make sure that you're maintaining the property. You have to make sure that all your rooms are filled to make sure that you're generating the maximum amount of money that you can. So it's not a passive income. So if you're looking to get into property using rent to escape one rat race, you're just going to enter another rat race in the rent-to-rent strategy. So there's a lot of work to be done in this strategy. So make sure you're aware of that before you get into it. And lastly, if we take the view from the landlord's perspective, they want to work and partner with someone that they can trust, someone that has had that experience of managing a property and know with confidence that they're going to receive their money at the end of the month. So looking at rent to rent from kind of a newbie's perspective coming into the property world, you're gonna may have some difficulties earning that trust if you don't have a track record of owning a property. This is where a lot of entrepreneurs in the property world deliver courses to get you up to speed on the rent-to-rent strategy and how to deal with it. So do your due diligence with these courses, because some of them have had mixed reviews. But I do think that there is value in someone like me having a property mentor to talk them through the kind of process around this strategy and other strategies for that example. Someone who's been there, done that, got the t-shirt and know what to do, when to do it, can be a valuable asset to have on your side. So that's the rent-to-rent strategy. In my opinion, I have two routes which I can go down. I can go down the route that I'm on where I'm saving enough money to own my own property and start investing, earning that passive income. That's route one. Route two could be to scrap that idea for the time being and focus on rent-to-rent, earning money from other people's assets. I don't have to worry about that massive upfront costs and deposit and stamp duties and all those headaches that come with finding that capital and start earning money right now. And I don't know, like, what do you guys think? Let me know your thoughts in the comment sections below. If you have experience of rent to rent or experience of just your standard buy to let strategy, let me know what your thoughts are for someone entering into the property investment world, such as me. My initial thinking is just to stick on the path that I'm on. It's going to be hard, it's going to be tough, but it's going to be worth it in the long run. And having that asset, that pride of ownership is going to be beneficial for the long run. So that's my initial thoughts. Let me know what you think in the comment section. In the next couple of weeks, I will actually be talking to some property investors and landlords who actually are involved in the rent-to-rent strategy. So that's going to be an interesting video to look out for. So if you haven't already, make sure you smash the like button and also smash that subscribe button to stay up to date with the latest content. As I mentioned, that's going to be a good video to look out for in the future. But as ever, thank you for watching. Thank you for visiting this channel and watching this video to this point. I really appreciate all your support and all the love that everyone's been showing in the comment section and also on Instagram as well. So if you haven't already, make sure you follow my Instagram account. But yeah, until next time, guys, make sure you stay safe. It's a tough world out there. Make sure you keep smiling and I'll see you again soon.